Simple.
Well, happy Saturday to you. This is The Real Money Pros, and it is a live financial advisory program. We can talk any topic you want as long as it's related to something having to do with money. Jeremiah Bates is here. I'm Brian Wiley. And again, we're The Real Money Pros. You can catch us each week, Saturdays, same time, same place, and again, live. So be sure to catch the program, interact with us. I've got a question for you. When we talk about the success of the United States, Jeremiah, we would go back to the history of having a constitutional republic, the formation of that. It was the uniting of the states. It was the people that were coming to the United States that were looking for opportunity. So it's almost like we had the choice breed of people coming to the United States. And here we are hundreds of years later, and we are the most powerful, successful, wealthy country, for the most part, in the entire world. We have the best military. We've got the greatest thinking minds. We have the opportunity is out here. We've got companies that we're going to talk about sometime in this hour or the next hour, like Micron, which is a U.S.-based company competing in the semiconductor space and being very supported by the Trump administration. In fact, many different industries are now very supported by the Trump administration, I think. Even those people who don't appreciate President Trump for whatever reasons it is, maybe they've got the TDS. Have you heard of that one?
Trump derangement syndrome, if I'm not mistaken. Yeah.
Yeah. Oh, gosh. It's probably from the seed oils that we got to get rid of. I don't know. All right. But you've got those people that would have to look at this saying, we're in a better place right now because we're bringing manufacturing back. We're supporting the people that are here. We're trying to create wealth. And I believe that the respect for American companies is coming back as far as within our borders. But at what cost? The cost I'm talking about would include decisions that would really start to skirt the line on what kind of policy is this from a capitalism standpoint. Like, we are capitalists, and that's what the United States has leaned on for the economic system, and our political system combined creates a very strong environment for great economics, and we have that. But then we get shunned for capitalism, and then people start talking about socialism and communism and spreading the wealth and some seeking utopia that can never be found in any sort of a political or an economic system, period. You just will not find utopia. It's going to be a work in progress. When we start putting limits on how companies can earn or how much pharmaceutical companies can receive for their goods, then we're in essence starting to clamp down on the opportunity, which is what attracted and made the great success here in the United States. But do you feel differently about things now? 979-59-MONEY, which my question really goes down to whether you like it or not. You've got to have a contingency plan. You've got to be seeking opportunity, but what is it that you're willing to do? So this credit card issue, 10% limit on
APR, annual percentage, basically the cost of borrowing. If you go apply for a credit card, you charge a balance on it, and the cost of interest for allowing that extension of borrowing ability, essentially putting a 10% cap on that. Well, at least it's being proposed right now temporarily for 1 year.
Is it a socialist maneuver to control an industry and what they can earn when that industry is competing in an open market, dealing with different types of credit scores, trying to spread the risk, and then, of course, charge their customers for that risk? And maybe it's absorbent. I don't know. But what's your opinion? 979-59-MONEY. Go to therealmoneypros.com. What we're really going to relate things to here, Jeremiah, is one is you're a licensed financial advisor working only as a fiduciary. I'm doing the same thing. I've got many years in the business. We're here to take your phone calls, estate planning. You could talk about taxes, investing. But I'm asking you what your contingency plan is if things go awry. So we have a company, Micron, for example. The stock fell back in March all the way down to $62, I believe. And now the stock is in excess of $400. And I saw the opportunity back then. I talked about it on the air. I talked about why it would gain some favor, but I never once thought it was going to go to these levels, which concerns me. So you have people that have invested in these. You see the momentum they've got going, but they're not going to want to sell it when it's now at $400, thinking it's going to go to $600. But when is it that you just limit yourself? Like, when do you actually limit yourself? So the credit card industry, if we don't want to pay 28% interest, then you don't use them. but is it because they're preying on the desperate? 979-59-MONEY. So we've got a lot to talk about here in this hour, Jeremiah. Good day.
Yeah,
good stuff.
It's a good day. It's good stuff.
Yeah.
It's on the credit card side of things, it's interesting. You bring up the socialism aspect of it, and obviously you could argue that there's some dynamics where you have that government overlord coming into the private sector and basically putting in guardrails and rules and regulation. Now, you could also look at there is some of that needed to an extent for consumer protection.
That's regulation.
Yeah,
yep.
But it's regulation. And, I think there is something to be said. The older that I get in life, that I find that you got to be your own advocate for a lot of different things, meaning like health insurance is a prime example. Mm-hmm. Paying a lot of money for health insurance, you think with the amount of money that you pay that meaning it would be smooth, simple process. No, I find myself anytime there's some type of health event in our household, there's a misalignment between the insurance company, between the provider, and all the things in between. And before you know it, it's like, well, looks like I need to become a low-level expert on what these billing codes are and actually read through that 500-page insurance summary document of how this whole thing works. And when you look at on the side of the credit card things, it's like, is this temporary 1 year 10% cap going to change the trajectory or really provide that consumer protection? And the argument on the other side is, well, okay, if that is the rule that they're just going to set, then the banks are in this for profit. They're not just there to strictly just, hey, take your deposits and then have that money there for when you need it. It's not how it works.
They're charity.
Exactly. And that non-deposit revenue, I mean, that's a big part of these big bank profitability. So for 1 year, capping at 10%, but the easy workaround too is they're likely only going to offer that to credit-worthy individuals who are not running into that problem of getting decimated on their cash flow, of trying to chunk down debt, where the majority of it is just, you're just keeping your head above water, meaning the majority of those payments are just going towards the interest. So I think the optics, you could say, okay, this is like a good thing under the guise of consumer protection and regulation, but the reality is it's likely not going to provide that consumer protection to the people that really need that protection. Yeah, it's interesting. I don't know. My opinion because right now this is just being put out there. There's no really set process that's going to put this in place at this point. I honestly think, in my opinion, this is going to be a big nothing burger. But however, this does kind of have this intersection of, what we've seen for a very long time where, people do get stuck in that spin cycle. There's that incredible persuasion that is abundant. I don't care if you're on your phone, you're watching TV, you're on your computer, of like, buy this, you need this, buy this, you need that. Any cliche you want, keeping up with the Joneses. And yeah, there's just that segment of individuals that will always kind of fall into that trap, as much as I hate to say it. So the only way you really get out of that is, I don't necessarily it's going to be the government coming in and say, hey, we're here to help, right? Listen to us. It's like, you got to put that onus on yourself to understand, be educated on why taking on this inefficient consumer debt is bad. And it ultimately comes down to the individual, in my opinion. I think this is more so of a political type, hey, look at this. This looks good. Not too dissimilar from the no tax on tips and no tax on overtime. If you really dove in those details, which we talked about last week, it's not really what that headline or that initial thought that a lot of people think it is.
When it comes to people having access to be able to borrow money, does it need to be fair? Does it really need to be a fair market where it's 10% or less, or that we all get the same rate, or we all have equal access? That because of the idiosyncrasies of people and the way that they manage their money, there is a reason for many of these people to be paying a very high interest rate as a discouragement to borrow. And second, it's a penalty for their history. And third, it is to help whoever it is loaning them money to be able to offset the losses that they have from bad debts. So should it be lowered down to 10% as a cap? 979-59-MONEY. We want to hear your opinions, because I want to change mine. I really do. I want to have somebody else tell me all the good reasons why this should exist, because I'm anti-payday loan type stuff. Those are predatory loans, and people get caught in that loop. Credit cards, same thing. Look at auto loans. They now offer 84-month options so you can fit into the payment on your $100,000 Ford truck. But that's the world we live in. You've got to have a backup plan. You've got to have a contingency plan. How are you feeling about things? You've got questions. You can call the program. Go to therealmoneypros.com. The Better Buckets. That's what you're going to learn there. Plus, you can contact us. Jeremiah Bates, I'm Brian Wiley. We'll be right back. Make this year that you work smarter, not harder, with Ataraxis. As your strategic partner, Ataraxis becomes an extension of your business, taking the burden of HR, payroll, benefits, workers' compensation, compliance, and staffing off your plate. You'll have more time to focus on operating and growing your business. Let Ataraxis handle the details so you can focus on what matters most. Learn more at ataraxis.com. That's ATARAXIS.com.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
This open enrollment, start making meaningful progress towards your long-term financial goals. Did you know that a health savings account, or HSA, is the most tax-advantaged account in the U.S.? Contributions are tax-deductible, which reduces your total taxable income. Withdrawals for eligible health expenses are also tax-free. And last, capital gains on investments are also tax-free. Did we also mention that it's free for individuals? Visit livelyme.com/pro today. That's livelyme.com/pro.
Back to the Real Money Pros.
We are back. This is the Real Money Pros, a live program right here on the weekends when you're listening to all these different financial talk programs or news programs. Well, you can get answers to your questions by calling the program at 979-59-MONEY. Plus your input. We like hearing your input, your thoughts about things, opportunity, risk. What do you think is going to happen in the markets moving forward? Now, Jeremiah, you're aware that I've been building a house, and I was a little frustrated last night as I'm finishing some cabinetry, and of course you've got framers that come in and all this other stuff. And I have a U-shaped kitchen, and so a U-shaped kitchen to get that thing in there right. One is I had to be really accurate on my measurements when I built the cabinets. But second is when you set it in that U, you don't realize how far off your walls are from being a 90-degree angle. In fact, I had calculated that it was roughly a 90.5 degree angle to the next part where I had to put these cabinets in. And by the time you stretch that out over, 12 feet or so, I think it was about 12 feet, maybe a little bit wider. It was like an inch. It's a lot, right? So, but the average by the time, if you go to the next wall, it comes out at 90 degrees because it meets and it's wavy. It's, if you really look down any wall, it might be 89.5 degrees to 90 and 90.5, but what it ends up at is perfect and is as planned. Now, if you think about the markets themselves, it's the same thing. You've got these ups and these downs that will happen. But the problem is that I was focusing on what was happening over a foot or 2 feet or 3 feet for that cabinet and then the next cabinet. And then I got myself literally backed into a corner because that's where I started to notice the problems. Because then how do I come out of that corner? I got to cockeye one of these. The cabinets is exactly what I had to do. I had to shim things, change my door profiles and everything just because of that little half degree. When the markets are rocky, you might focus on what just happened, like the week, or maybe it was just this week of opportunity, or it's a week of losses, and it can change your entire plan to the point where you forget where you're even going in the first place, where you're so wrapped up into it. So I'm curious of what people are doing with their contingency plans. On the weekends, Jeremiah, there's a lot of radio programs where they're really selling to you, actually. They're trying to sell you some sort of a variable or a fixed annuity. And when they talk about these, let's say, indexed annuities, what they're talking about is some sort of stabilization or limits on downside for your returns, which then should alleviate your risks, feeling, your anxieties, your fears of the markets, because now you know you cannot lose. And then you get, stock market related returns? Oh boy, related at best. I don't know what it's relating to, but I have never once seen a person come out of a policy like that has actually come out better off. I can say that. But what they're looking to do is to have the guarantees, right? Remove the risks. I think this credit card thing and limiting a 10% is the same effect. We're trying to take the risk out of it. We're taking the opportunity out of it at the same time, and that's what people are missing is that, yeah, sure, the risk might be gone or mitigated, but you removed all the opportunity.
Yeah, I don't disagree. I mean, you can look at, again, from the credit card side of things, they'll make a shift. It's like they'll pivot somewhere else. Like, meaning if they're going to lose revenue, and even if you slated it, if you're in the camp of this is predatory and they're preying on the lack of understanding of how this works on these people that are just, again, stuck in this spin cycle of just taking on immense credit card debt and then just barely being able to make the payments. If you fall in that camp, and then let's imagine we do get this 10%, there's likely going to be some pivot by the banks where they will find another way to make up for that loss of revenue that does, arguably prey on those people that have a lack of understanding, or it's just going to hurt everyone across the board. Like for instance, those of you, and I fall in this camp as well, that love to take advantage of the rewards and that come from travel credit cards and things like that. I pay it off, never pay a cent in interest, points accumulate. We get free flights. It's great. It's kind of like I geek out on that stuff of how to leverage and maximize the reward systems that come along with credit cards. It's fun to me.
It's at the cost of the retailers you're dealing with or whatever it is, but if they're accepting it, I guess why not, right? Why should you be the martyr?
Exactly. No, that's kind of my point, right? Where it's like there's this tie that's going to have this effect across the board where it's like you're not going to make everyone happy. It's going to slip off. But kind of going back to your visualization, your analogy with the market, I think that is so important to have these, because sometimes people look at the market and it seems like mysterious. You can't really It's like intangible. It's like, what is this? And prime example, I met with a prospective client. He was the best friend of a client that I work with. And I met with this client, and he came into the office where his quote was saying, "I don't have a pot to pee in." You know what I mean? And he just had it in his mind that retirement wasn't going to work. He hadn't done enough. He's in a job that's really cyclical. It's the mortgage industry. So, of course, we all know that how that's looked over the last few years. So income has been really tight. So he came in, and his comment to me after the meeting was, I got to be honest, I was pretty embarrassed coming in here. I thought that I was just going to walk out of here with my head down. And what the reality was, he walked out of that saying, dude, you're good. Like, based on what you're telling me, the cash flow projections that we're doing, what you have invested, Social Security, pension, your spouse, all this, it works, and it works really well. And he was just over the moon, right? Long story short, he talks to his friend. His friend comes in to meet with me, business owner, built his business, does well, but he's getting into his late 50s. Body's kind of starting to hurt. He's over dealing with the customer service aspect of this. And the first comment that he comes in and says, don't like the markets, hate the markets. I knew someone that lost their behind with the market, but he had no understanding of what the market was. And the reality, they actually had some retirement accounts that they were a simple IRA that they set up for their employees that they've been stocking money away. Showed them the buckets, right? Obviously, your timeline of money, your short-term bucket, your liquid bucket, your income bucket of money, and then your growth bucket. Those simple IRAs were invested in the growth bucket, meaning when we were looking at their statements, their accounts have grown. I'm like, look at what these accounts have done. This is exactly what we want. But again, you bring it back to the human emotional component side. He didn't care. He was more focused on, well, what if it all goes to zero and we can't. It's like, okay, let's dial this back and let's really give you the education and understanding of what the market's purpose is for you. And when you look at especially what happened over this week, I mean, it's like if you live in one of these states where you could be really subject to some bad weather. On the East Coast, hurricanes, I mean, I know there's some deep freezes going on with the Midwest and East Coast right now, but if they're sounding those alarms, well, then generally there's going to be a reaction by those people of like, hey, maybe you're going to board stuff up. You're going to get some sandbags. You're going to stock up on food. Maybe you go get some fuel for that backup generator because of that concern of what could potentially happen. And that's exactly what the market did this past week and arguably the week before from the commentary that was coming out of the administration about these tariffs. Uncertainties hitting, so there's going to be a reaction. Short-term move by the market, short-term move by these residents basically on what this weather's coming along. But then the storm never comes. The storm never hits. That's exactly what we saw over the past 2 weeks. That tone was completely changed. We're not going to take military action. We're going to not threaten tariffs on the EU because we're not going to get Greenland. Market pushes it to the side, and we saw actually some gains last week, and we saw some good positive performing days. So again, it's that old cliche saying where you don't want to make short-term movements on long-term money, but you got to understand the emotions and how your mindset, that loss aversion, if you will, can take away the potential returns and long-term rewards that you get by taking on that risk. And again, when it comes down to how do you view that and what's your framework of your thinking around that is incredibly important. The visuals and timeline, that's it. This is the Real Money Pros. We got to take a break. Stay with us. Apollon Wealth Management has transformed the way our team delivers financial advice. With their support, we're more equipped and more empowered than ever to provide top-tier financial planning, investment management, and personalized financial guidance. Apollon has been a key partner in helping us achieve our clients' unique financial goals. Whether you're an advisor looking to enhance your client experience or an investor ready to take your wealth management to the next level, reach out today to the Real Money Pros by visiting therealmoneypros.com. Let's elevate your financial future today.
I'm Nick Daniels with Tree City Advisors of Apollon. My team and I help our clients implement tax-smart strategies because taxes are one of the largest headwinds your investments face. We use strategies like Roth conversions, 1031 exchanges, and more because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Begin your home ownership journey today. Look no further than Academy Mortgage, your first choice home loan lender. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Their team of seasoned professionals will be with you every step of the way. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to The Real Money Pros.
This is The Real Money Pros. You can find us online. Go to therealmoneypros.com. The magic of that website is just know a couple things. One is we're not there making money off of your next move. That's just not what happens. In fact, Jeremiah, myself, you've got Nick, Alex, the entire Real Money Pros team is part of Apollon Wealth Management. So, yeah, if we can get somebody's business to be able to do their financial advisory work, then we'd love to be able to do it for the right folks. But the website itself is set up for advertisers and for people to be able to go and glean information that they did not already have, to read about better ways of investing, such as our BetterBuckets. Now, I didn't invent buckets, but I do believe that we have nearly perfected the bucket-based investing model for people to be able to see it visually and then show how you actually calculate your financial life into those buckets. Now, when I was talking about how the markets will go up and down and it gets people worried, well, that is because people are looking at things as a whole. They're saying, oh, my finances, like if you had everything at risk, you wouldn't even know if you could pay your mortgage next month based on market volatility. You could take it all away in theory. So then there would be a lot of fear with that. So you're smart. You put money into your checking account. You've got a savings account, and you know what that means. It's just stable money, but you're also lamenting it when you try to see if it's gained anything, and it never does because it's just sitting there, preserved. Now, if you grew your own food, Jeremiah, you lived out in the sticks and you're self-sufficient, you're probably some solar guy, really hairy too, probably, imagine, and stinky. But anyhow, you want to make it through the winter. You gotta grow whatever you can grow, spring through the summer, harvest in the fall, and whatever you have, and you bring it into your home. You're looking at this going, I've got to make sure I can survive winter and spring with this. So you've got your food stores there, and you ration it out. But it's not the potatoes aren't going to be growing indoors. You're not going to produce more off of what you've got stored inside the home. You've already prepared it to be able to be used later. Now, let's imagine you have a greenhouse, and the greenhouse is finite in its space. It's got 4 corners on it, and there's only so much you can actually grow in it. Even if it's growing really well, it's just going to produce whatever you can get out of that. But it comes to you, and you can go put it in your house, and you got your food stores will continue. But now you've got acres and acres of land that is sitting out there, and you look at it thinking, well, gosh, if I grow anything out there, it's going to be subjected to insects and weather, and it might be fire, it could be animals, whatever it is that could destroy your crop. So you could say, no, I'm not going to do that. It's working against me. Or you could look at it saying, well, gosh, even if I didn't have a couple good years, if I had one really good year growing something out there, then maybe I can augment my food stores, and then I can start looking at how I'm producing the new food inside the greenhouse. Well, this is just another visual of the buckets with investing. That field is your long-term bucket. And if you already know that it's going to be subjected to the weather in theory or the markets themselves, it could be Trump's speech, could be whatever it is, you are hopeful and expecting for it to do well over a period of time. But if you look at it day by day, or like that wall, foot by foot, or if you look at this as I didn't get wheat this long, or whatever it might be, you're going to live in fear. But you must have that visual connection, and we all have it. It's just I'm trying to make sure it relates to you. So go to therealmoneypros.com, share with us any questions you've got. We're going to answer them back as fiduciary advisors, not looking for anything else other than you to be loyal to the Real Money Pros. That's it. That's what we want. We want you to learn our concepts, and we believe that you will do better. Now, we have advertisers that support us with that message, and that's why they're on there. So good stuff. Now, carrying that into like what's going on right now, this is the same thing. You stabilize let's say you remove the caps from the credit card industry, or you put the cap on them at 10%. You're just taking away opportunity for better ideas to come into that market. Because it has a limit, it is going to be finite in what it can actually offer as far as opportunity. Is it better for consumers? I don't know. Some people just have to suffer, and some people, in fact, will always be poor. I've noticed that by habits. I've got friends that, they're their 50s, and they're still talking about cryptocurrencies. I'm like, why? It's because you're trying to hit a home run. That's why. 979-59-MONEY. What are your thoughts? What's your contingency plan? Where's your safety lie? How have you calculated yourself into it? Brag about yourself a little bit. What is it that you're doing that you think other people would do and probably come out better? I'd like to hear the ideas, and if you need a little help, call the program. Jeremiah Bates is here. I'm Brian Wiley.
Yeah, to your point around that risk reward, I think if there's one thing, let's assume that you've been on the other side of this, meaning you're not risk averse, so you didn't pigeonhole yourself into being conservative, and you weren't sitting in cash over the past few years. You were on that pendulum was way to the other side, meaning you were pedal to the metal. You were all in on the markets. You were all in on growth. Your liquidity arguably was really small, meaning if there was a significant market event or a market turn down, you would be feeling that pain. What I would argue is that this incredible bull market that we've seen over the past few years has given investors an incredible opportunity to recalibrate, meaning you at the end of your life you don't win the game by having more points on the scoreboard as far as money, meaning how can you take that and translate that into quality of life impact, tangible financial targets? And to your analogy about, hey, growing the food, some years it might be a little dusty, a little barren. Those fields aren't really being very fruitful. But then you have that one year where it's like, holy smokes, I actually need to hire people to come in and harvest all these great gains. Case in point, I got a client that I've been working with since 2016, 2017, doing the initial planning, the cash flow planning, analysis, retirement plan. It was great. Everything worked based on the goals that we had at that point in time. And this is the beauty of checking in and seeing what the lay of the land is, how lifestyle changes. But year over year, when we saw these incredible gains that we weren't anticipating, because in my opinion, you don't want your financial plan to be reliant on outsized gains, because generally that's not going to work out if we don't see those outsized gains. But in this case, year over year, when we met these good years, it's great. Hey, we like this idea of buying a couple horses. We got this property. What do you think? Well, the market has been working in your favor. It's been going according to plan, better than we expected. Let's get the horses. Fast forward the clock about a year and a half. Hey, we need some covering for these horses. We need a tractor to kind of better till the land. What's that going to cost? We time it. Great. Most of your money's in pre-tax. Let's find that timing aspect and follow the distribution plan. So we're following tax efficiency. Got it done. Fast forward the clock to about a couple months ago. We want to buy they sounded like, they're like, this sounds like a wild idea, and we almost feel a little hesitant to even ask you this, but we want to buy a motorhome, and it's a little south of $100,000. Great. Let's meet. Let's talk about it. Let's come up with a plan. And it works. And the reason why it works is because we were properly allocated, taking the risk without leaving anything to question as far as the immediate goals and the needs. And then the beauty is the fact that the market environment has produced those gains. It allows for that extra quality of life where, yes, you can get that RV, which a few years ago I would have been telling you no, but now you can do it. And that's the beauty, again, of the bucket plan, where you let the growth do the growth, you let the protection be the protection, you let the income be the income, and it's all coordinated to, again, what are those tangible financial targets? So if you look at the market, I don't think this is going to be a hot take for anyone listening where fiduciary financial advisor states that there could be volatility in the market. It's going to be the case. I think, President Trump came out and he's imposing 100% tariff on Canada now. So I wouldn't be surprised if the market opens on Monday that, hey, it's the same story. But you can't let these short-term market movements based on whatever the headline is, I don't care if it's Administration A, Administration B, whatever, you can't let that sway your decision-making, and you can't let that determine like where and how you're investing your money. Now, there is something to be said like, hey, if you can be opportunistic and take advantage of some things that are right in front of you, that's great. But that doesn't mean you do a complete pivot to the total plan and the strategy that you have in place. I mean, the buckets are a strategy. You generally are successful by being disciplined and following a strategy. You can do any sports analogy across the board, but it's kind of like do your job. The Patriots are one of the most successful NFL organizations, and the proof is with the championships they've won, and their guiding star was do your job. Well, that's the beauty of your investments. Let them do your job, and that following that strategy will pay dividends, no pun intended.
So I had an email from last week's program. Somebody said, you keep talking about the income bucket. What are you putting inside that income bucket? And it's kind of goes the same thing for the person that was growing their food. So in the greenhouse, you're going to grow enough food to be able to make it through the winter so you can create your food stores, but your opportunity is out there in the fields. We got that. But what is it that you put inside the greenhouse? And it really goes down to, well, what is it that you need? Because we can't say it's going to be the same for every person. Let's say, I don't know, beets are super healthy, but some people don't like beets. Now, when you're building an income bucket, we actually are solving ourselves into it. So this is not something haphazard using the BetterBuckets system where you've got, X amount of money in the first bucket, which is all being preserved, and X amount of money haphazardly in the income bucket because you really like the dividends that some company was paying, and then X amount of money going into the growth bucket, and you're scared, and there's limits in there. But instead, you're actually calculating yourself into the need. That's where the financial planning actually comes into play. It's boring. I get it, but it's visual and it works. And boring sometimes is, in fact, better. So you build up that stable bucket with the amount of money you know you're going to need, and then you create the income to replenish it. It's that simple. Learn more at therealmoneypros.com. We'll be right back. Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Have you ever met with a financial advisor looking for some advice just to leave being sold an annuity you didn't want? At Tree City Advisors of Apollon, we do things a bit differently. We focus on your financial goals, helping you fix past mistakes, simplify your current finances, and plan for the future with confidence. Your first consultation is always free and without obligation. Visit TreeCityAdvisors.com and start your journey to financial freedom now. That's TreeCityAdvisors.com.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
We're back to the Real Money Pros.
Welcome back. This is the Real Money Pros. We are live. Phone lines are open. You have questions, we have answers. You want to talk about tax efficiencies. You want to talk about Roth conversions. You want to talk about estate planning. You want to talk about markets. You want to talk about individual positions. Send it our way. 979-59-MONEY. It is 979-596-6639. Go to therealmoneypros.com. It's where you can get access to our educational content. You can find our previous archive shows via podcast. You can see our faces via the live stream that we do. So again, you can get access to our great sponsors. So again, that is therealmoneypros.com. You have questions, you can also send them through the website. We're going to go to the phone lines right now. We have Bob calling out of Los Angeles. Bob, what can we do for you?
Hi, good morning. Thanks for taking the call. Question about Roth conversions. I'm 67 years old, and I want to start moving some of my 401k money into Roth. I guess that's the right thing to do to lessen the RMDs when I turn 73. So I'm currently, my gross income this year will probably be around $50,000. So I'm thinking of converting money up to the maximum tax buckets of either 22 or 24%. And of course, take into account the IRMAA implication. What's your thoughts about, going up to the 24 percentile and maybe, start paying for IRMAA a little bit? What's the pros and cons in your opinion of doing that?
Well, I mean, you're pretty much nailing them there, right? But it's what we want to look at, because when you look at the actual execution of a Roth conversion, no matter how much you actually convert, that's going to translate into taxable income for you in the year that you execute that conversion. So now we got to look at that ripple effect. In receiving that extra income at your age, how does that tide lift other boats? And you brought up one of the things that people will be surprised about when you do either a large Roth conversion or you are doing a large distribution out of a pre-tax IRA, especially if you're 65 or older and you're on Medicare, is the IRMAA charge, which means that your Part B premiums are based on your modified adjusted gross income. And that's a key thing to note there. It's your gross income. We can't take into account your standard deduction, then your senior deduction, and then the enhanced standard deduction that was just part of the big, beautiful bill. So again, it's something that we want to pay attention to. Not necessarily, I mean, put it this way, there's no solutions, it's just trade-offs. So we have to look at, okay, in understanding that if you're gonna run into a higher IRMAA charge, which remember, they look 2 years back previously of that modified adjusted gross income. If you run into that higher IRMAA charge, is that charge justified by this large Roth conversion that you're potentially going to do and getting that tax-deferred growth into that Roth account and then being able to withdraw that completely tax-free? So those are decisions that we need to weigh. And if we ultimately arrive at the point where, this Roth conversion makes a lot of sense, because Bob, you mentioned, hey, we might be running into a significant, like a very sizable RMD. I'm not even going to be spending that in my cash flow plan, which just means me being required to take that money out means majority of it is going to be going to Fed and state taxes. Then that is certainly a scenario that would be an advocation for doing this Roth conversion. And I appreciate the fact that you're looking at these marginal tax brackets, because again, if you're looking at your You said your gross income is around $50,000. Bob, are you a single filer or are you married filing jointly?
That's married filing jointly, and that number is my pension. So that's what the 50,000 is going to be, the pension. So,
are you receiving Social Security? You or your spouse?
Yeah, that's another factor. I'm debating whether to jump into Social Security this year. I'm already full retirement age, and that was another question. Should I wait till I'm 70 or jump in now? Because I've been reading in 2032, they're going to hit the limit, and they may have to cut the benefits back if Congress doesn't do stuff. So there's a lot of balls that I'm juggling in the air right now, trying to decide if I should just, go with social now or wait, and that'll add to my tax base as well. And I figure if I'm pulling all this money, I'm not going to get any of the discounts anyway. So. I'm going to be taxed 85% on my social, and I'm going to lose all those senior discounts if I pull out all this money in the next, coming years. I've got a big nest egg, so I'm looking at pulling out $200K a year for the next 5 or 6 years until I hit 73.
Bob, you're doing the right thing. This is Brian, by the way. Phone line. Excuse me. You're doing the right thing on the idea that you're going to convert. You want to convert as much as you can. You want to pay it at the tax rates that you're aware exist right now. We all are under the assumption, I think we'll all agree that taxes will only go up in the future. It's the one thing that we do know will happen. It's going to be through exclusions, or it's going to be through opportunities, or taxing Social Security, whatever it might be. So yes, do the conversions. Yes, sit down with somebody and do the calculations and make sure that you're aware of all of the impacts before you go into it. And there's going to be a cost to this opportunity. And the cost is that you're going to have to pay more in taxes, of course, and it's going to cost you more in your Medicare premiums. Now, Social Security, do you think, out of your heart of hearts, do you really think that even if the Social Security system runs out of money as far as having the trust fund be funded with anything, that there would be a disruption in payments that would last longer than a year before Congress steps in and makes up for it? No, you can't, because you've got 50% of the recipients of Social Security. They are relying on that money. In most cases, it's all they've got. And so they will vote that way. Politicians know that. We're going to supplement it as taxpayers. We know that. Our working class will end up seeing probably a raise in the FICA tax rates that we have, but the payments won't be disrupted. I do not believe that. So I would look at it for longevity, which is how long do you expect that you're going to live? And then the only thing you can do is guess. Of course, you're going to use your parents as examples, other family members, and then your general health, and try to come up with your best guess. And then it's a calculation. Which ones are going to be best? Now, if you die early, didn't work out maybe, or maybe it did, but I would really consider starting to draw that as soon as you can, and maybe you want to wait it out and get that additional bump each year until you hit the age of 70. So it really needs to be calculated.
Do you think, if it were you, would you wait till 70, or you think it's better to grab the money now and invest it? And I hear the break-even point's around 80, but
well, I'm glad you're asking what I would do. What I would do, my mom died at age 56. My dad died at age 75. Me waiting until 70 would be a fool's game, in my opinion, even though I'm generally healthier than them. So that would be a reason right there to consider taking it at age 62 for some people, and not waiting till full retirement age. Now, waiting until 70, if you've got longevity ahead of you, then you might really want to consider age 70, even at the risk that it's going to run out of money, which it will in 2033 or 2034. We've come up with a plan that I have given to Congress. There are several congressmen and senators that have the plan that I wrote on how to fix Social Security, but that's not going to be adopted. It's too much of a political football. It's like shutting the government down. The payments are going to go down from Social Security for some period of time until they get done fighting about it, and then they're going to come up with some solution, which is not going to end up being a long-term solution. So I think us as taxpayers should be very interested in forcing a decision and a remedy to the Social Security system to happen now, and not wait another 5 or 7 years until it becomes the hottest topic we've got politically. But yes, you should absolutely get the evaluation done. We have an expert on our team. She is a certified Social Security analyst. It's Alexandra Lundgren, part of our financial advisory team. You hear her here on their air as well. She can calculate those for you, give you ideas. We can also hook you up with somebody locally if you wanted that as well, Bob. But get the calculations done.
Sorry, if I may, 2 more quick questions. On the Roth conversions, do you guys recommend paying the taxes with liquid funds or withholding them? That's question 1.
Ideally,
and then I got one more after that.
Yeah, ideally, we'll ask that question because we're up against the clock, and we'll answer both of those when we get into the top of the next hour, Bob. But, I mean, when it comes to withholding, it's either you have the liquid cash, which means more money goes into the Roth via the conversion, but it all comes down to your cash flow. What was the other question, Bob?
Oh, the other question, the 5-year rule. Since I'm already 67, any money I put in, am I correct? Did I read right that I can pull the money out at any time? I don't need to wait 5 years, right?
This is going to be a cliffhanger. You have to wait until after the break. We'll get back to this question and explain it thoroughly because I think everybody needs to know the answer. This is the Real Money Pros. Bob, thanks for the phone call.
Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. Ataraxis partners with businesses of all sizes and industries. Their mission? To reduce the stress and risk that comes with business owners trying to do it themselves. Visit ataraxispeo.com. Ataraxis, elevating businesses for the benefit of all.
Your emotions can drive many decisions, but when it comes to money, they shouldn't be in the driver's seat. I'm Alex at Tree City Advisors of Apollon. We get to know you and your goals to build a holistic, time-based investment strategy. Investing isn't rocket science, but having the right partner helps you stay the course. Learn more about us at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
Are you a do-it-yourself investor looking for ideas from a pro, but not necessarily interested in hiring a pro? Well, I have something to share with you. I build investment allocations for my clients on a daily basis, but sometimes people simply ask if I will share my ideas with them. My answer? Sure. The way I see it, I'm lucky these people consider me to be an expert. So I started writing a quarterly newsletter with model portfolios built for different purposes. My readers get to decide if they want to follow any or some of my ideas. Now, powered by freedomfolios.com and the use of their TD Ameritrade account, my followers can get their investment portfolio in line with my suggestions with the simple push of a button. Using the freedomfolios.com technology is simple and it's fast. I update my models once a quarter, and freedomfolios.com then sends my subscribers a message via email or text letting them know that they may want to update their investment accounts. It's the least expensive way to get professional models without the cost of a pro. Visit freedomfolios.com. See my models there. You can start your free 30-day trial right now. It's freedomfolios.com.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
To offer valuable advice and earn clients' trust as an advisor, it's essential to always put their interests ahead of personal gain or the preferences of any particular company. Advisor Insurance Solutions is dedicated to delivering insurance solutions from an advisory perspective. They provide objective and unbiased insurance planning, making it an integral part of their comprehensive advisory process. If you're looking for insurance guidance that aligns with your financial goals, visit therealmoneypros.com. That's therealmoneypros.com.
Are you in the market to buy a house or just looking to refinance your current mortgage? For helping individuals and families achieve affordable homeownership, Academy Mortgage is a first choice. And when finding that perfect loan for the perfect home, you need a company that will treat you like family, not just another file. To help you navigate through today's ever-changing housing market, Academy Mortgage has zero down options available to you. That includes zero down with no mortgage insurance. We also offer medical professional loans and 2-1 rate buydowns that help lower your monthly payment for the first several years of your loan. Origination, processing, underwriting, and closing and funding will all happen in-house. With over 34 years in the business, we know that buying a home is more than just a house. That's why it's important we protect our customers and safeguard their financial wellness for years to come. Visit us online at academymortgage.com today to start your journey to homeownership with Academy Mortgage. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Nobody protects you from mayhem like Allstate. I'm a speed bump. Did you hear what I said? I'm a speed bump. And if you have cut-rate car insurance, the cost to reattach your muffler could really be a bump in the road. So switch to Allstate, save money, and be better protected from mayhem, like me.
Based on coverage and limits selected. Subject to terms, conditions, and availability. In most states, prices vary based on how you buy. Allstate Bar and Casualty Insurance Company and affiliates, Northbrook, Illinois.
Running out of gift ideas for your loved one? Send flowers with Flower Fix. And need to create joy in your living or workspace? With many working from home these days, create joy in your space with flowers. Flower Fix is a subscription-based flower delivery service perfect for birthdays, anniversaries, or any special occasion. We offer 2 subscription options to choose from, a text-based subscription or a traditional one. Enjoy these big, beautiful hand-designed bouquets that are delivered straight from our flower fields to your door. Log on now, www.flowerfix.com, to choose your flowers today. Have control over when you want flowers delivered. Weekly, bi-weekly, monthly? Get your flower fix at flowerfix.com. Use code FlowerFixPro to receive 20% off your first order. flowerfix.com.
Hi, I'm Stephanie Gallegos with Price for Life. Do you have a life insurance policy that you'd like to sell? If you don't need the coverage anymore or would rather not keep making the premium payments, visit our website, priceforlife.com. Don't let your policy lapse when you can potentially get a cash payment for it. There are several reasons why a life settlement might be a great value to you. Perhaps your policy is too expensive, or you feel you no longer need the death benefit, or you may think you need to wait until death before your family can get the money from the insurance company. This is why you may want to consider a life settlement. Price for Life has excellent resources available along with a free evaluation process to help you understand the value of your policy and the options available to you. Price for Life's clients have received hundreds of thousands of dollars for their policy when they would have otherwise just let it lapse by stopping the premium payments. Get the compensation you deserve. Visit priceforlife.com today and fill out the case evaluation form to see if your policy qualifies. That's life.com. priceforlife.com.
Healthcare expenses can be a burden, so why not make the most out of the money that we'd spend anyway? Take advantage of the most powerful tax advantage account title available to us, a health savings account, also known as an HSA. That's why you need Lively. Visit Lively right away. Open your HSA, roll other HSA money into that new plan, and then start saving. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO.
Real Money Pros is brought to you by The Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates, the weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
Welcome back to the second hour of the Real Money Pros, a live financial advisor program that you've got access to. You can call the program whenever you'd like. If you're only hearing this part of the program, go to therealmoneypros.com, pick up the podcast. You can hear the first hour. We've got a caller who has stayed on even through the break because he's interested in a very smart question that he had actually two questions. And Bob is calling us out of Los Angeles. Phone lines are open, 979-59-MONEY. Jeremiah Bates is here and Brian Wiley, both active, licensed financial advisors working only as fiduciaries. And we're here to help. So, Jeremiah, do you want to recap his question so we can get into that?
Yeah, let's hit on the first one. It's a great one. It's when it comes to doing a Roth conversion. So let's bring it back a little bit what we're actually talking about. Bob essentially has pre-tax money in a traditional IRA, or maybe it's a 401k, where the contributions going into that account, he never paid taxes on those dollars on those contributions. Bob's now 67. He's going to quickly come upon RMD age, required minimum distributions. He's going to start pulling money out. But we also understand that Bob's filing status, merely filing jointly, and his estimated gross income of $50,000 gives him a tremendous opportunity to be tax efficient, meaning pulling money out of that traditional IRA, effectively recognizing income strategically to take advantage of his efficient tax rates. And then instead of taking that money and putting it, let's say, in his checking account or his savings account, he's going to move it into a Roth IRA, aka Roth conversion, which still allows those dollars to be invested, still grow tax deferred, and then ideally be withdrawn completely tax-free, not subject to state or federal income tax. So that's really what we're talking about. So Bob had two questions before we had to end that first hour, one of which was, when it comes to the money that I'm pulling out of the IRA for that Roth conversion, should I withhold taxes out of that, or should I already use just money in my savings account or liquid cash to pay that? It's a great question. I'd say the real answer comes down to this. If you have the liquidity of non-qualified money, meaning it's not in an IRA, it's not in a Roth, it's just in your savings account, checking account, if you have enough to cover that tax burden without decimating your cash flow and your needs, your wants, and wishes, then absolutely. Because it means that all of that money that you're converting from your traditional IRA, all of it goes in the Roth IRA, meaning you're maximizing that Roth conversion strategy. Now, if we look at a scenario where maybe you don't have that liquidity on hand to cover that, then sometimes it does make sense to elect that tax withholding from the conversion. Couple things that we got to pay attention to, because when you are no longer a W-2 employee or self-employed, meaning you're retired, you're now living off of these passive income sources, maybe it's a pension, maybe it's Social Security, maybe if it's supplemental withdrawals out of your IRA, or maybe it's dividends off of a brokerage account, or maybe it's a rental property. You have to proactively make sure that you're paying money towards taxes along the way. Generally, that's going to be in the form of quarterly estimated tax payments. Or you can elect tax withholding from the IRA distribution or from that Roth conversion. Now, here's the deal, something you want to pay attention to, because if you don't pay as you go, you could likely run into a penalty when you file for not withholding or paying taxes throughout the year. So you can do this one of two ways, or both ways, actually. You can make quarterly estimated tax payments, which if you haven't done this before, there's some safe harbor rules. So if you pay 100% of the total taxes that you paid, let's say in 2025, you're not going to have any, even if it's not enough to cover your full tax bogey, you're not going to run into penalties. If your adjusted gross income, however, is over $150,000, then you need to make 110% of your previous year's tax payment through estimated tax payments or through withholding. Just want to make that caveat there. I've had some clients, when they filed their 2024 return, they're like, I was penalized. Most of the time it was negligible, though. I'm like, it's really not that big of a deal. The money that was invested, you ended up earning more, but I get it. You don't want to pay a cent more to the IRS than what you need to. So make sure you pay attention to those estimated payments, or you're supplementing that through withholding. But to answer Bob's question directly, ideally, don't elect withholding. Make those payments out of that non-qualified bucket of money so you maximize the money going into your Roth via the conversion.
I think Bob's still on the line. Does that make sense to you, Bob?
Yeah, I think so. I just want to. So you're saying when I do the Roth conversion, just pay. What I've been doing is just paying 25%. 20% for the Fed, 5% for the state. Is that about the standard equation?
It sounds like a little on the heavy side, but no, it's better to pay a little bit too much if you're going to be doing your taxes soon. You just get it right back. Are you paying it Are you paying it right out of the IRA that you're converting out of, or are you doing this out of a non-qualified, like your checking account?
I did a Roth conversion at December 25th, or last week of December. So I just paid right. I just paid the taxes before the January 15th deadline of 2026. So I went in and just paid it.
Okay,
so
got it. That's good.
So that's kind of if I just do it at the time of the conversion, I don't have to worry about quarterly taxes, correct?
If it's enough.
You do it right there at the time of the conversion. And again, kind of going back to what Jeremiah said, it's going to be 110% of the prior year's taxable income. And so you just use that, and then you can make that. And then, of course, you can make up for it later if you wanted to do that without a penalty. Some people then find themselves so upset about the penalty when you think about this. It might actually benefit you to keep the money invested and then get to the point. Maybe it's just earning income off of some investment. So really look at that about which way you want to do it. But when you do convert and you take the tax money out of the qualified account, it becomes part of the conversion and the amount that is going to be calculated into all of these things that could be affected, such as Medicare payments and all that stuff.
But I'm a little confused about the 110% from the previous year. That I guess I don't do this every day, so that's throwing me off a little bit.
Yeah, Bob, it's what's known as the safe harbor, because it kind of really what boils down to your question of like, should I withhold or should I make estimated payments? Well, what we're trying to avoid is a penalty from the IRS, basically kicking you in the gut for not paying throughout the year, right? So to avoid a penalty, the IRS has what's called safe harbor rules, and there's two categories. If you're adjusted, let's just talk about 2026. If your adjusted gross income, if you anticipate that to be over $150,000, then we want to look at what was your total tax that you owed for your filing year of 2025. Let's just use easy numbers.
Okay.
Let's imagine that your tax obligation, the actual amount of money that you owed once you filed everything to the IRS was, say, $100,000. For you to just have a blanket approach for 2026 to make sure you're not penalized, your total estimated payments, whether that's through withholding or quarterly estimated payments throughout the year, if that amount is $110,000, you are not going to run into any penalties, okay? If your adjusted gross income is under $150,000, that mark is no longer 110% of your last year, it's 100%. So in that scenario, if you prepaid throughout the year through estimated payments or through withholding through your IRA conversions or distributions, then you would do $100,000, no penalties. So those are those safe harbor rules that the IRS has for you to make sure you don't hit a penalty, because sometimes your income could fluctuate. Like, meaning, how are you as a taxpayer to know, like, well, I don't know if like what exactly my taxable income is going to be, because it could change based on this, and this. So the IRS says, okay, cool, we understand that. So here's these two amounts that you could pay throughout the year, no penalty. And then when you actually file your return going into the next calendar year, then it all shakes out to either you owe more, which is fine, or you get it in the form of a refund, but you're not getting penalized for lack of withholding throughout the year.
Okay, very good. No, I appreciate that. I'll Google safe harbor and just kind of make sure I understand that concept. Hey, last question, guys, on the 5-year rule. again, I'm 67 and I've had an IRA account for 5 years. So doesn't that exclude me from having to wait 5 years to touch any of the money that I'm going to be throwing at the Roth conversions?
No, you're fine. I mean, so if you've had your IRA established for 5 years, and the fact since you're over 59 and a half, you don't have to worry about this 5-year rule. Like, meaning you can tap into the amount that you convert, which you could think of as your basis in your Roth, and then the earnings you can also tap into as well.
Okay, so if, for instance, I want to, buy something, I mean, it's better to keep pulling out of the 401k, but if I need money from the Roth conversion money, I can tap into that, but that's not the bucket I want to go to.
Exactly, not the bucket. Right? Let the Roth grow, supplement through the pre-tax. We got to take a break. We'll be right back.
Thanks.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deirdre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
Now, back to the Real Money Pros.
We are back. This is the Real Money Pros. Go online, find us at therealmoneypros.com. Please do yourself the favor as well. You'll learn something. We've got interactive parts of that as well, so you can get instant feedback. You can read about the BetterBuckets. You can contact our team. You can send us questions. Please look at our advertisers. They are the ones who bring you this live financial program here on the weekends. Jeremiah Bates is here. I'm Brian Wiley, and the phone lines are open, 979-59-MONEY. Now, I was kind of laughing because Bob had called the program back in the last hour, and we'd had him on now for 2 segments, which it's great. I was telling Jeremiah, I said, because I've been doing radio for over 25 years now, and I said, I remember full shows where somebody called in at the very beginning and they stayed on all the way through the entire hour. And it was a great show because they were asking great questions that I knew applied to a lot of people. So let's get that out to people. If you've got a series of questions and you think that, you can't just ask one, and call the program. You might find out that you get all your questions answered here on the program, or at least we'll all wonder together. 979-59-MONEY is the phone line. That's 979-596-6639. Or again, go to therealmoneypros.com. Use the chat feature there. It works.
Yeah, one thing that Bob brought up, and it was a great question, and this is something that pops up where he's diving into, which I appreciate he sees the benefit of the Roth conversions. He's thinking about that. And I love the fact that he's looking at all the other aspects of, hey, it's not just a conversion on an island on its own. We need to look at, how do I cover the tax obligation for this? I know there's a few different ways to do it. What's the most efficient way? How does this affect the IRMAA, a.k.a. your Medicare Part B premium charge? Hey, I've heard about this 5-year rule. Like, he's already thinking about these things, which is great. And I've seen this on the flip side where people don't think about these things. They just do a big distribution out of an IRA, or they do a big Roth conversion. Then all of a sudden they're like, whoa, well, I was paying under $200 on my Medicare premiums. Now I'm paying like $400 a pop. Like, we're almost $1,000 for Medicare premiums. What happened? My Social Security wasn't taxable. Now I owe way more in taxes because now 85% of my Social Security taxable. What is going on? Hey, I was getting a tax subsidy for my healthcare credits prior to 65. Now I don't get them. Why? Like, these are things that you just have to pay attention to. So the fact that he's got that top of mind, it's great. But one thing I want to touch on, and if he's still listening, is this intersection between, hey, I'm 67. Should I file my Social Security at full retirement age? But I also want to do these Roth conversions. And I would argue to him, that's where the cash flow planning becomes really important, because it's like, listen, he's got a pension that's paying close to $50,000 per year. It sounds like he's got significant assets that are not in the form of a Roth, not in the form of a traditional IRA. So it really comes down to, well, what's your burn rate? What are you spending per year? And let's see what needs to be supplemented through that. Then we can look at, okay, is a combination of IRA withdrawals, non-qualified withdrawals, in addition to Social Security? How do we look at that? Are we going to put more focus on reducing your RMD because your pre-tax IRA balance is so high that the risk of tax rates going up in the future and you being required to take that money out, do we want to insulate ourselves from that? Okay, then maybe the answer is, let's delay Social Security with the benefit of increasing that amount that you receive because you're delaying past your full retirement age. Excuse me, and then we can be tax efficient with these Roth conversions. So that answer truly comes down, it depends, but the foundation for us to make that decision on is, what's your cash flow look like, and what are the resources that we have to supplement that cash flow to make sure you're having fun, you're enjoying life. I love the technical conversations around the conversions and tax efficiencies, but this all has to be based on, what do you want your money to do? Like, what are the things that really are going to make you and your spouse happy? Like, what are your bucket list items? Like, not everything, in my opinion, needs to be looked at through the lens of, how can we be tax efficient? How can we do this? It's like, well, let's put that secondary. What's important to you? You're 67. You got your energy. You got your health. Let's make sure that you're having some fun, good quality of life. Let's make that the foundation first. Check that box. Great. Now let's look into all these other efficiencies that we just talked about. One thing to mention too is with that Social Security, let's look at the spouse side of things as well. He mentioned he's married. What does her Social Security benefit look like? Meaning, is it going to be more beneficial through the holistic planning to put more focus on required Roth conversions, lower the RMD? Because if there was an early passing or loss of life for Bob, then how does that affect his surviving spouse? Because if now we're still subject to extremely high required minimum distributions, she's going to inherit that IRA as her own, which means that tax bracket just gotten cut in half. Majority of that would go towards federal taxes. But if we are aggressive with Roth conversions, we mitigate that problem to an extent, and then delaying Social Security could result in her receiving a higher widow's benefit because we delayed on his, and maybe we could file hers because maybe she's receiving the spousal benefit. So you can see how quickly it's like my mind's turning. I'm like, man, we could look at this, we could look at that, and it's just always interesting to me how all these things tie together, and not one decision should just be looked at on its own. We got to look at how it affects everything.
One of the things I've noticed in the last few years is I've met with a lot of other financial advisors. Some are not involved with the firms that we're involved with, and I'm really surprised about in some cases, how they don't go through these conversations with their clients. And I understand that most financial advisors, the only way you're actually paid is to do the investment management, whatever it might be. But how do you actually derive your investment decisions, especially if you're working as a fiduciary, if you don't look at all of these type of conversations? And we're only talking about conversions right now. We're not talking about, because I brought something up to Bob when he had asked about Social Security and it running out. And I said, well, he says, would you start taking it at 67? Do you wait till 70? And I said, well, it's really a longevity thing. And then you got to play a guessing game. It's the weirdest thing to me that, my mom died at a young age. She died of cancer, colon cancer, which I'm clear. I do the checks and all those things. So, maybe I'm not going to be afflicted to something like that. My father died arterial sclerosis, which, that is basically clogging of the veins. And that is a dietary issue and it could be hereditary, but I think it's highly treatable if you catch it on the early side. So it's a nice notice on my side. So I could say, yeah, maybe I'm going to live longer. Because I have a grandfather, my dad's dad, that lived to 99. He was healthy. That guy he had his mind together. It was great. But it's still a guess. But it needs to be a conversation. And sometimes difficult conversations like these are avoided when you're already just making the money from the investment management and clients aren't asking about the taxes and they're not asking about that. So why would I even bring that up? Well, you bring it up because you're a fiduciary. And you're making decisions on behalf of the client that has to be done in their best interest. So I am encouraging people who know that they're working with financial advisors and paying fees to start asking these questions of the advisors, because otherwise, why would you want to have the conversations if the clients don't require it and they don't even know about it and it doesn't affect, they're just looking at me, the investment management, and I can keep them, come in, quick meetings, go away, all that other stuff. And I'm thinking, well, I know why. One is if you have a complaint, you're going to have to defend it. And if you're going to defend it, you better have done the research, made notes, and thought it out. The best interest rule, the fiduciary rule, is it's an onerous thing, but it's actually super easy to follow. There really should be no mistakes because you're going to use all your knowledge that you know, and you know everything about these people, and you say, well, then this is what I would suggest, and this is what we're going to do. And that should be applied. If you're not getting that level of care, then please go seek it or ask the questions. Ask us. Join us on therealmoneypros.com. Call the program 979-59-MONEY. We're trying to make this easy on you. So then you can get into the better buckets, and then you can solve yourself into it. And then you have less anxiety about the markets and maybe 100% tariff on Canada now. We're not taking over Greenland, or we are. What are we doing? You don't know week for week, and that can cause a lot of worry.
Discussions are being had on Greenland.
All right, we're going to take a break. We're going to wait for your calls. We'll be right back.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Did you have a tax strategy going into this year to help maximize your tax savings? I'm Jeremiah Bates with Tree City Advisors of Apollon. We consider key factors like required minimum distributions, Social Security, net unrealized appreciation, 1031 exchanges, and more. Because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then then use tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
If you have a small business, Staples has your sign.
Banners for my bakery?
Staples has your sign.
Oh, posters for my new pet store.
Floor decals for a pharmacy.
Every day, Staples associates help every kind of small business create bold signs to make big impressions. And now get $10 off custom signs, banners, and posters when you spend $50 or more. This is your sign, so print it big at Staples. Ends 5/28. Visit staplesconnect.com/thisisyoursign for details.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to the Real Money Pros.
And we're back. This is the Real Money Pros. We are live. Phone lines are open. 979-59-MONEY. That is 979-596-6639. You can visit therealmoneypros.com. That is our website. Open 24/7, 365. You can get access to our wonderful sponsors. Again, we're not here to sell you anything. We're live. We're here to talk strategies and give you education. So if you want some strategies on anything you're dealing with, investing, retirement planning, sending kids to college, estate planning, how to properly allocate, maybe you are self-employed, you want to cut that corporate cord and figure out how do you translate from business owner to retired with all the time on your hands, and how do you navigate those waters? These are experiences that we have had as fiduciary financial advisors working with thousands and thousands of clients at this point. So again, 979-596-6639 is the number. I'm Jeremiah Bates. He is Brian Wiley. Brian, obviously interesting week in the markets, a little bit of volatility. Do you think that this slows down? I mean, the tariff conversation is still going to be there. It sounds like President Trump is threatening 100% tariffs. And I think I know we talked about Trump derangement syndrome, but I forget the other one. It was like Trump always, the taco. Trump always chickens out. And they put a name to that. Yeah. And I don't necessarily chalk it up as chickening out. I mean, I don't know. Maybe it's this high level negotiating strategy and tactics that he seems that maybe he's really good at. I don't know. But again, I do know that what the market does not like is uncertainty and it seems like shooting from the hip tariff responses to, our friends to the north. My takeaway is this, take it for what it is. I think this continues throughout the year, throughout this administration, and I think the markets will have these short bouts of volatility, which isn't necessarily a bad thing. Volatility in the markets is what gives you opportunity. And that usually serves people who are disciplined and follow a strategy, serves them well.
It's just the pattern. And so we already know the pattern, which is it's just his method. Now, a lot of people may not agree with his method. I don't it's never worked well for me to just kind of, walk into a room and start throwing over the tables and then say, here's what I got to get, and then have people instantly comply. Usually it seems to me the nicer I am, the more I can get to work out in my favor. And, of course, listen to people the whole bit. It's just the methodology that's different. And what will happen, I think it's already happened too, which is I saw one comment here, to Iran. They said, don't mess with Trump. He means what he says, and he does. He's got a history of doing things that he says, but he's also got a history of not doing things that he says. And so I think that is the problem, is that you've got a pattern where, yes, he is going to verbally threaten something that sounds unreasonable. What we don't know is if he'll actually do it. The taco trade is kind of funny. That was the whole idea, that he's going to bark at like Canada, 100% tariff. You guys make this China deal, and then, he'll back out of it. See, if he didn't say 100%, I'd believe it more. If he said, we're going to tariff everything 30%, I would have believed that one. 100% sounds like the same thing that's gone on with Greenland. Like, it's just a lot of talk, and so you become attuned to it. I mean, I worked in a restaurant when I was in my 20s. I was going to college, and my boss was he was just the definition of a jerk when it came to the way that he looked. I mean, he would get so angry, yelling, and it was a cook. I mean, he'd be hucking bread out of the kitchen at other waiters and so on. But it didn't take me long to learn about how he operated. So then I learned how to leverage inside that. I became, his confidant for what was happening out in the front house, and I just knew how to work with it. And some people couldn't. And so to me, it was very predictable what my boss was doing. And with President Trump, I think he's becoming predictable. So I think in the end, it's got to be like, let's just focus on the results that we're getting. And maybe we can all disagree about whether or not we approve of the methodology. But so far, the results have been good. We're bringing back industry into the United States. We do seem to have a lot more economic control over decisions that are being made around the world. Geopolitically, it seems that the United States is, we've certainly inserted ourselves back into the boss position. I mean, we just took over Venezuela. I still don't know the answers to what's going on there. I don't know. I mean, it's tough. It really is. I think it's testing a lot of people's beliefs on what's right and wrong, on the way that things are being done or the things that we're doing or taking. And I think some people are just in full agreement, and some people that are starting to break. It's like, too much. Where does it stop is my question. I just don't know the answer to that.
Yeah, I don't think anyone does. And I think we're along for the ride at this point, which ultimately does bring it back to how does this – I think, in my opinion, what's helpful, and we're at least working with clients, it kind of tones it down and puts some concerns at ease. Like, what does this mean for you? Like, does this change or put into question the things that we want to accomplish for you, your kids, your future, what's right in front of you? And then we can kind of put aside at least a lot of these uncertainties that are legitimate. I mean, I'll be the first one to say it. I mean, like there's a lot of concerns out there, and they're totally valid, from a grander zoomed out position. But again, I think where it's, okay, here's what you've done. Here's what we have right in front of us that's specific to you. Are those going to be derailed? And I think definitely more times than not, those items are still intact.
Diversion. Elon Musk, I want to talk about this. So Iran, we've got all this stuff going on with Iran. There's an insurrection going on there. You've got people that are trying to take that theocracy out and not have it be that, but go back to a more democratic type of a process. And I've talked about this in the past, which is, it seems to me that people it's like escaped. I have not heard any politicians say that they had concern over the amount of control that Elon Musk has about world communications. Period. Like, he's got, by the end of last year, I think he had planned 20,000 satellites. I don't know or 12,000 satellites. He's covering every bit of the entire world now with the ability to have instant communications to the outside world. And so Iran goes into this lockdown mode, and Elon Musk did exactly what I've been concerned that he might do, which is, he likes this idea that there's an insurrection there, so he turns on free access to SpaceX's Starlink. For any person that's got the cell phone with the chip in it, which the vast majority of cell phones made now have that satellite chip in them, and he enabled it. So in essence, he's starting to take world political positions. And my concern is what would happen if you disagreed with what he was supporting? Like, would you have a different feel on this one? And I've got some friends that have talked about it. I said, listen, I totally agree with the fact that he would give those people access. I'd love to see North Koreans also have free access to whatever information they want. Chinese people, let people make their own decisions. It could improve their government over time because people would vote that way. But man, that's a lot of power. I would say that he's probably arguably the most powerful person in the world right now with that capability.
Yeah, it's like something out of Hollywood. The Avengers, Tony Stark, obviously the, Iron Man in those movies. He's the genius tech billionaire, and he develops all these Iron Man-like robots that is supposed to be the world protector, and we all know how that panned out. There was a rogue AI to control the robots. No spoiler alerts, but you kind of get the idea. And it's interesting with SpaceX. I don't disagree where, you got an individual who is... He's got his hands in a lot of things, and you could argue that there's a tremendous immense amount of power that he has. And what's really interesting about SpaceX is, reading the sources, it seems that the likelihood of SpaceX lining up an IPO this year, it seems like that's where the trend is heading. And if you look at the future where there's a lot of interest, a lot of investment from public and private, it's these categories or sectors that SpaceX is directly involved in and arguably does a really good job with. That IPO, that's it. If you're going to ask me, I don't think we did that this year. We did our forecast of what we see on the horizon for this year.
Didn't.
And then we didn't do the recap of what our forecast was last year. But regardless, if you were to ask me that question, that was certainly one of the things that had top of mind of, what's really intriguing to me is SpaceX. Do they go public? What does that IPO look like? And how much optimism and enthusiasm is behind that? But I think that's going to come sooner rather than later.
Okay, just a candid question then. Would you buy it? If you could get access to the actual IPO, the initial public offering price, you've got some offering for it, would you buy it? They're saying roughly $700 billion initial valuation or more than that. It could be closer to $1 trillion. It'll be the largest IPO in world history, and like if you take Aramco, which is the Arab oil company, I think that's what it's called, its IPO, this one will be some 20-something times larger than that one, and that one was the biggest IPO in history prior to this. Would you buy it? Would you buy it, Jeremiah?
Yeah.
Yep.
Yeah.
Same, and that's literally the reason why I have Tesla stock. I figure here's the way it works. So when any company is going to do an initial public offering, the IPO that you've always heard about, here's how it actually functions. So you've got SpaceX right now, private ownership. They're going to go out and they're going to make a relationship with an investment bank that is going to help them make their offering. That investment bank is going to create what's known as a syndicate. That syndicate is going to be the other help or the help from other investment banks. And then they go out and offer it out to their customers. I'll explain who those customers are and what the likelihood of you getting SpaceX IPO offerings to you. We'll do that when we come back.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then used tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Back to the Real Money Pros.
We are back. This is the Real Money Pros. You can find us online at therealmoneypros.com. Plural, just therealmoneypros.com. Brand new website. Looks great. It's got great functionality. You can actually send us your questions, chat with us there. But we've got a lot of instructional material that we believe that every person should start thumbing through. There are concepts such as initial public offerings right there where you can learn about it and see some visuals. And plus, we've got great video editing. All that stuff happens right here out of the Real Money Pro studio. Jeremiah Bates is here. I'm Brian Wiley. Phone lines are open. I'm going to talk about IPOs, but the phone lines are open. Interrupt us if you have a question. We'll take it. 979-59-MONEY. And if you've got an opinion, share it. I was talking about Elon Musk and the power that he has. And the reason why I cringed a little bit about this whole thing about him opening up access to the Iranian people so they could actually get data from outside of the Iranian borders, which would only strengthen the insurrection, of course, be a bigger problem to the theocracy that is there. My concern is that there will be a target, literally by Iranian operatives of some sort, to go after Elon Musk. And that concerns me because I like Elon Musk. I really do. I actually believe that he's been good for society up to now. He has a tremendous amount of wealth, which gives him power, but he's also bringing society forward into a new technological era. He's been really encouraging of responsible AI that has the rules written into it where it's got to benefit humans and it's going to seek truth and all these other things. But when he makes a political move like that, my concern is that somebody's going to disagree with it. Somebody's going to put something out after him. But, okay, so SpaceX, he owns 40% of it from what I understand, and he owns 40%, 60% is by some private equity group or other combination of owners, but they're going to offer it out, in theory, to the public. Now, they would do this by making a filing. Of course, I'm going to go through all the technicals, and then it's got to be given to an investment banking company that would take it up as the project manager, basically, to bring it to market and fit it inside the SEC's boxes, make it legal, get it into the exchanges, choose whether it's going to be the New York Stock Exchange or the NASDAQ or something in between. Is it going to be the 24-hour NASDAQ? Who knows? They come up with a symbol, and then they're going to figure out how to get it out. What they're trying to do is to raise money. Elon Musk wants to go to Mars. That's no secret. He also handles roughly 90% of all the traffic that leaves the Earth and goes to space, to include project jobs for NASA and competing companies and other countries as well. They are doing defense work, everything. So it's a very popular company, private sector. I think it was a success of what came out of the stoppage of NASA, where NASA had to give up the space shuttle program and the funding was cut. So it went out to the public and it did well. But what happens? So they bring in the money and they issue out the shares. Now, once you own the shares, you own a piece of the company and you own all of the rights to the assets and the future profitability of it. And so they do this through the initial public offering that is given to the investment management company that then makes a syndicate, as it's known, maybe they go out and they grab 3-4 other companies like a Merrill Lynch and a Bank of America and a Wells Fargo advisors to help out. Now, if you actually get a phone call from your advisor saying, hey, I've got some IPO shares, do you want them for SpaceX? You'd be lucky, because if you think about it, if Wells Fargo was given, let's say, 100 million shares, you've got to sell these. Pre-sell them for the IPO, try to get the best price you can. They start out at, let's say, $20 a share, and maybe they're noticing they get a little bit more, so they do that. And they offer them out to the buyers that won't sell them immediately, because they want to try to preserve the markets. And if they all hit the market on the first day it hits the actual stock exchange, well, then they're going to go down, because the supply and demand is going to be a mix match, presumably anyway. So they have preference. They're also going to reach out to the clients that can buy the vast majority of their shares the soonest and the fastest, because that's the easiest path. So typically IPO shares don't make it all the way down to the regular retail consumer. Some online custodians are issued some of those shares. So this isn't the case with all IPOs. And then sometimes you have guys like Elon Musk that has been making, I think, conscious capitalist plans. And what I'm saying about that is that Tesla would probably be the avenue. If you own some Tesla stocks, there's probably a chance, and I don't know this for fact, there's probably a chance that you would be offered direct IPO shares. Now, the IPO has, and they're marked at $20, and that's the IPO, and everybody buys their shares. And then the next day, then it opens up in the secondary market. So it's actually after the IPO. This is not the IPO. If you go in to the markets and you try to buy SpaceX shares that day, you're going to be subjected to whatever the buying and selling activity is within that market. It's not the IPO. Okay, so the IPO shares, typically very tough to come by, and sometimes it's maybe wants people that own Tesla cars. Who knows? I do believe that he'll probably want to reward his loyal base, those investors that have been behind the robotics company of Tesla, the battery company of Tesla, meaning his diversions galore that happens. Like, he just adds things to it. It's not a car company. It's a technology company, an AI company. It's an interesting company.
No, it is. I mean, if you look at the diversification that Elon Musk that he has with all these companies, I mean, he's got obviously Tesla, SpaceX, he's got XAI. I mean, he's been very forthcoming that he wants to be at the top of this race for AI. And then we talk about SpaceX, and you talk about the conversation of them wanting to insert data centers in outer space. We're talking about this like technological like stuff that you would think 10, 15 years. I mean, it's like the equivalent of the Jetsons, right? Where it's kind of wild to fathom that we now have the ability, we have the technology, and now you have the minds that have the desire to actually execute this and make it happen. And if you look at Elon Musk's track record, I mean, he's kind of forced things through to get to these points. And SpaceX, I mean, upon that IPO, assuming that it happens, I mean, yeah, expect some volatility in the beginning. I mean, we've seen some IPOs that come out where there's a lot of enthusiasm, a lot of optimism, hits those secondary markets. And, Tesla, it's a high volume stock. There's a lot of speculation on that stock, where if you look at the market is undeniably one of the best ways to accumulate wealth, maintain wealth over a long period of time. This is about owning good diversification, good companies, continued solid earnings and all that. But we also know that there's a segment of the market where it is that short-term speculation side. And this is where you get in the shorting. This is where you get in those zero-day options contracts of, is that price going to move by a cent in this amount of time or not? And there's obviously people that can experience extreme profitability on that. And also to the other side, I mean, we saw that in the price of natural gas this week, where I think it finished up well over 60% gain. And obviously there's expectations around much colder winter, high demand of electricity to keep the heat going on and all that. So natural gas is going to be a benefit. But does that explain that huge ascent that we saw in natural gas futures? No. We saw one of the largest short positions that we saw on natural gas before we started see that price action hit. And obviously a short position is profitable when that underlying asset that you're shorting actually goes down in price. So if it goes up in price, those short sellers need to cover that short, which really exacerbates the price going up. So again, point being, when you look at SpaceX, if you're hearing this, you're like, yeah, I would love to get on that IPO. Again, bring it back down to what's your framework of that decision making, aka the buckets of what bucket does SpaceX fit, and understand why you're buying it. Because if you jump on that initial enthusiasm of it being an IPO'd company, and you start to see that price retrace in those first few days of trading, then making sure that strategy was set beforehand allows you not to make a dumb decision of maybe, oh, no, I'm going to sell out of it 2 days later, and then you see it just take off to the moon. So my bottom line is my takeaway, excited for that SpaceX IPO, but understand why you're buying it and where you're going to hold it.
That whole IPO concept was very popular in the late 90s, and it was almost one of those things where if you had access to the IPO that you were just going to become rich, assuming that you actually took the profits on it. And then I had to go through as a financial advisor the years between 2007 to basically now where IPOs are a question mark. Is this a good idea or is it not? And the worst call I had made, Jeremiah, was on MasterCard. I said, there's no way this one's going to work. This one's a horrible one. And my gosh, I couldn't have been more wrong on that one. You've got to do the risk analysis, have a purpose for it. If you need to understand your purpose better, go to therealmoneypros.com. Learn about BetterBuckets. And if you need help, contact us. Go to treecityadvisors.com. Jeremiah Bates, thank you. I'm Brian Wiley. We thank you for listening to this program. Interact with us. Find us online. We can take this much deeper, and we're back next weekend. Have a great weekend.